I'm Vanessa Cole, co-founder of Cole Klein Builders, and our mission is to provide affordable new homes for families in need.
I'm Katrina Icasa, founder of Icasa Company, and our mission is to rehab homes for affordable home buyers.
We're friends, moms, entrepreneurs, and lovers of all things real estate.
By the way, we're both licensed realtors with a passion to educate on buying and investing in real estate.
Together, we have sold over $30 million in real estate, and our mission is to educate our listeners on buying, selling, and investing in real estate. Welcome to Housing Happy Hour. Welcome to Housing Happy Hour, the podcast.
Hi, everybody.
It's Vanessa Cole and
Katrina Icasa, and we're here with our preferred lender, Jennifer.
Yes, our guest speaker for today's episode 5. So we're really excited because one thing that we've kept receiving from listeners is lending questions. Everybody wants to know, can I obtain a mortgage? My credit sucks, or I've never gotten a loan before. And so we want to, demystify everything. Let's get down to the nuts and bolts. And Jennifer is amazing. We've done deals together and a super powerhouse. She's the branch manager of Cross Country Mortgage, and they do loans in 50 states. Mm-hmm. So we're excited. I want Jennifer to just jump in. And what's the title of this episode?
I want to buy a house, but my credit sucks.
My credit sucks. So Jennifer, let's get right into it. When the buyer comes to you and says, my credit sucks, but I want to buy a house, where do we go from here?
So usually my first question when somebody says that to me is, what is your version of sucks? A lot of times I find that people think that their credit is bad, and it's not as bad as they think it is. Usually I find when somebody says to me, well, I'm really worried about my credit and I don't think my credit's that great, it's usually pretty good. And then when they're like, oh, it's amazing, I've done everything correctly my entire life, it's like a 400. So it depends on how bad it is, and why it's bad, what the reasons are and what has caused it to be bad. So first of all, what everybody should know is for maximum financing, you actually only need to have a 580 credit score. Maximum financing means the lowest possible down payment. You can also, though, at only a Cross Country Mortgage, you can also get a loan with 10% down to a 500 credit score. That is because, by the way, Cross Country Mortgage is a direct lender to Fannie Mae, Freddie Mac, HUD, VA, USDA. Those are all
the major
lenders. Those are all things we'll
loans.
talk about later.
Yes.
So we can do whatever the government entity allows. And FHA says if you have a 10% down payment, you can have as low as a 500 credit score.
Okay.
So it just depends on why, though.
So say for some of our viewers that are watching and they have a credit score of 400, and you're saying to get the maximum credit score of the maximum financing, they need to be at 580. What does that roadmap kind of look like for somebody at a 400 to get to a 580?
Well, it's very, very dependent on what caused it to get to a 400. So if you have, a lot of times also, people will have a lower credit score simply because they don't have much or any. Maybe the only credit that they have is, a couple collections or something like that. So having, number one, a variety of different types of credit. Mm-hmm. That means revolving credit, installment accounts, mortgage, obviously, and student loans, things like that. That helps your credit score. If you have a pie, your biggest piece of pie to your credit is going to be late payments. So the more late payments you have, the more recent those late payments are, the more that it's going to compound and compound.
Destroy your...
Right.
Can you help them remove those collections off their credit? Or
Sometimes.
What is the best way for them to do that?
So collections and the more recent the collection is, the more it's going to affect your credit score. Paying a collection off does not necessarily improve your credit score. Sometimes it does and sometimes it does not. It depends on the overall credit profile. So sometimes people will have like small little things that are really like having a big impact because they are very recent, especially medical collections. Those things are actually the easiest ones to try to get removed on your own. And a lot of times it's just like I like to say with all things in mortgages and in life. If you do not ask, the answer is always no. So sometimes it's just a matter of having a conversation with the collection agency. Listen, they don't make any money if they don't collect money from you. Okay, so that's what they want to do. And so sometimes you can negotiate with them to get them to remove things, especially like when they're little tiny things. You would be surprised how much of an impact that makes.
And so far as timeline, would you say, for example, if I had a 400 credit score and I want to get to a 580, but I had a few late payments, and I have what it takes to get there, let's say I had the resources, is it possible to get there in like 6 months, 9 months?
Yeah.
It is
12
possible to get there in 7 days.
Oh, wow.
7 days.
That is the truth. And I'm going to tell you
Buy
why.
your house in
Okay?
7 days.
So how is that?
I'm going to tell you why. Because when you have something, like let's just say that your score is bad because you have, 3 little dinky medical collections that just came and hit your credit report. And it can be like little small thing. I'm talking about sometimes there's collections for $25. This is really the truth, but it doesn't matter how much it is. How much it is means nothing. It's how recent it is. So if you went and got all those things deleted, the collection agency can do an electronic delivery to the credit bureaus, and that will report on your credit report within 7 days.
Wow.
So
That's new news for
it's really a matter of the overall credit profile and what's on it and what needs to be done to get it there as to how long it's going to take. There isn't any like magic number. It's every single person's credit report is different because it's an algorithm, and you
Correct.
just got to know how to read that.
Wow,
Yeah.
Jennifer.
Yeah.
That's
I didn't
amazing.
know it was so quick.
I didn't know
in
you could do
7
that.
days. I'm like telling everybody 7 months.
Yeah.
7
Well, it could take 7 months too. I mean, it could take 2 years. I mean, it just depends on what else they have going on.
Right,
Wow.
their profile.
If it's because they don't have credit, that you can do, and you normally will see a huge bump in your score within 45 days. That is because let's say you have no credit score. By the way, if you don't have a credit score, that doesn't mean you can't get a mortgage. You can get a mortgage with no credit score whatsoever. Okay.
Wow.
We do something called non-traditional credit, which is where we'll use references, rental references, utilities, and things of that nature in place of a credit report. And you can get maximum financing still. 3.5%.
So you can buy a house with 0 credit,
That's correct.
but you got to call Jennifer.
That's right.
Right, but you have to call Jennifer.
Only me. I'm the only one that can do it.
Right. And so also just to back up a little bit for our viewers and listeners, the process starts with filling out the application with the lender.
Right.
That's where it starts. And in that application, what are some of the requirements that they can be prepared to submit in the application?
So in the
portal?
application, it's mostly going to be things that you're going to know off the top of your head. Your key and major points are your credit. Obviously, that's extremely important. So we're going to ask you for your full name, your date of birth, your social security number, and your current address, and that's how we're going to pull your credit report. Then we're going to ask you about your employment, your income. So how you're getting paid, if you're W-2, if you're 1099, or are you self-employed, and then what that monthly amount is that you're receiving, and then your assets, which is like how much money you have available to put down and things like that. So those are like the major points. And also, we have online application. Most people choose to do an online application because it's more easy, it's more convenient for them and easier.
Yes.
But we also do applications online or in person if that's what you choose. But if you ever are doing the application and you get to something and you're not sure, you just skip it and then we work on it together.
Okay.
So what happens if the collections you have are not $25? They're $5,000, $10,000.
Yeah.
What do you do then?
So just because you have collections doesn't mean that they need to be satisfied in order for you to get a loan also. Depending on how old they are, as crazy as it sounds, I may say to you, don't touch them. Just leave them there.
I've heard
because
that.
Sometimes when you pay off an old collection, you will do what I like to call waking up the sleeping giant. And now you've reactivated the thing and now there's activity on it.
Okay.
It depends on how recently it's reported information, how old it is, and things of that nature. You're like, well, I have X amount of dollars here to work with. What can I do to get the most amount of points that I can with this many dollars? And then I'll tell you what those things are.
That's
Yes.
amazing.
Yes.
Yes.
That's amazing.
And that's what I love. And that's what I always share with the buyers is Once you submit your application and the lender can get in and see everything in your profile, they then can formulate a plan to help you make the next right decisions to obtain that specific goal, which is to buy the
Right.
house.
Right.
But I think a lot of times that buyers are so scared to even do the application that they feel that they have to go pay off everything, whatever their
Please
debts
don't
are.
do that. Please
Yeah.
do not take it upon yourself. What I try to tell people is, this is something that I say all the time. Think about your loan as a court of law. I am the attorney,
Yes.
my processor is my paralegal, and the underwriter is the judge. If you don't tell me where you hid the body, I cannot save you. Okay?
Right.
I need you to give me everything so that I can
Yes.
help you, so that I can show you how we put together a plan to get you where you need to be. I'm not going to approve or deny your loan. I'm going to help you get approved for one. So sometimes people are afraid for me to say it because they think like, oh, I got to make it look good for her first. Girl,
Give
please.
you everything. Give you
Okay?
everything.
Just come over with your rollers in your hair and your bathrobe.
Yes.
I don't need you to look good. I'm going to make you look good.
Right,
Okay?
right.
So that's, kind of like what that is too. Like don't do anything.
Yes.
Because you really may be actually causing yourself a disservice by doing that.
Yes. And that's what I tell you. It's like you said earlier, there's an algorithm, meaning there is a formula. And as the consumer, you don't know the formula. As realtors, we don't know the
it.
formula.
Yeah.
As the builder, rehabber, we don't know the formula. The
She's the
lender
expert.
knows the formula.
And not every lender, I would say, knows the formula.
But meaning
So
your
don't
team.
take right. I mean, I know the formula.
Yeah.
I also, by the way, the lender's job is not to, fix people's credit. And we're not credit repair or anything like that. I have something called a designation called a certified FICO specialist, as it were. And I educate myself about these things so that I can help people to get to where they need to be. But we do not charge $1 for it, ever. It's education and it's assistance. It's not like we're not attorneys and we're not gonna send letters to the creditors for you and stuff like that. We're not doing that part. We're showing you how to get there.
That's
Got it.
great.
That's awesome.
So basically, like we talked about in our very first episode, the home buying process, meeting your lender or calling Jennifer is the very first step you want to take.
Yes.
And then you can move forward in looking for a home and going through the buyer's criteria and figuring out where you're going to live next. But the very first step is getting with a lender.
Yes.
We recommend Jennifer, but in general, that's the first step. You can't move anywhere without
Yes.
having a pre-approval, which you need a lender to get.
So I want to take some time to peek behind the scenes. So let's fast forward. The buyers have submitted their application. You have provided a pre-approval letter. Say, for example, it's $200,000. We've now gone under contract on a house. What are you and that buyer doing now during those 30 days? Like, what's happening behind the scenes? You hear the processor, underwriter, docs. What's going on?
Okay. So something that when I first pre-approve someone, that I tell them, okay, right now you did everything you need to do up to this point. We're not going to do anything else until you get a contract. So don't be like, what's going on do I need to do something with my loan? Do I need to be signing something? You don't have anything to sign. You don't have anything to do until you get a contract, unless your pre-approval should expire. That's only because your credit expires. And then if we need to update it, then we will update. You don't have to do the process over again or anything, but we have to refresh some of your documents, your pay stubs and your bank statements, and your credit report as well. By the way, your pre-approval will be good for 120 days from the date that we run your credit. That's only because your credit report is only valid for 120 days. Mm-hmm. So if we need to, because sometimes people see that expiration date and they'll be like, let me go hurry up and buy a house. Please don't hurry up and buy a house.
Yeah.
It is not a loaf of bread. Okay. It is an important thing. We want you to we want to make sure that that you feel comfortable with everything and that you're moving at your own pace that you want to be at. So you don't need to hurry up and do anything. But from that point, once we get a contract, that's when we have all the documents for you to sign and all the disclosures for you to sign. And that's because those documents are not only specific to you as the buyer, but they are specific to the property. So we don't have anything for you to sign until that happens, unless we need like an authorization form to verify additional information for you or something like that. But the bulk of it will not happen until you get the contract. So once you get the contract, we will prepare your disclosures and we'll send them out to you, and then we'll go over all of those numbers with you and make sure that you understand them all. Most of the disclosures that you receive are standard general disclosures that everyone receives. There's only a few documents in there that are specific to you and to your transaction, and that will mean anything numbers wise to you. But certainly we want to make sure that you understand what all those things are too. The way that you receive the disclosures, by the way, from us anyway, is the same fashion that you receive the contract in. It's this electronic signature. It's going to look really similar. The only thing, and I always make sure that people know, it's going to be a little bit different because we have a lot of your personal information, like your social and things like that. So it's much more encrypted, and there's like more levels of things to get into. But we make sure we provide you with all those instructions and stuff. And then your loan is going into underwriting. Well, it's going to go into processing first, which is basically we're just going to like prep it for the underwriter. But we do a lot of, at my branch, we do a lot of legwork up front at the time of the pre-approval, so that we have less of those things to be doing when we get to underwriting. So I've been doing this since there's been dinosaurs roaming the earth, and so I used to be an underwriter, and so I know exactly what it is that they want.
That's awesome.
And so we are doing that legwork up front, so that when we're getting to this point, what we're doing basically is just updating information, because some of it is happening in chronological time. You cannot provide a copy of your earnest money check if you didn't do it yet. So there's certain things as that time is passing that we're going to be telling you what needs to be done. Also, people will say, oh, well, okay, well, what am I going to do? And when do I have to do this? And so on and so forth. And we're going to tell you that, but also we're not going to like let you forget that you haven't done it. Don't worry. You're going to be like, I wish these people would stop calling me, because we're going to be making sure that you're doing everything you need to do up to the time of closing.